This week, we are continuing to track news on new construction and also checking in on mortgage delinquencies and potential foreclosures. Plus, a lot of constraint all around that and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly market report where we share our real-time insights into our local housing market. So let's dive in. First up, we're talking mortgage delinquencies. And we wanted to put this chart in here because maybe you are hearing about growing debt and default on things like credit cards and auto loans, and maybe you're starting to wonder, does that same thing happen with housing? Will there be more foreclosures coming, short sales coming through the pipe? Well, it's not that it couldn't happen. It certainly could, but the actual data is showing the lowest rate of serious mortgage payment delinquencies on record. So for the time being, if you're holding out for that short sale or foreclosure wave, you're going to need to have a lot of patience. We also mentioned new construction. We talked a lot about that last week, why builders are active and bullish in our market and how they're using financing incentives to make new construction as affordable, if not more affordable in some cases, than resale, which you never see. So here's a headline from Zillow's data that new construction sales in September soared nationally. Now, locally, we haven't seen permit activity drive up yet. There are a lot of developments in the pipeline. And as we've said, demand isn't the issue with the market right now. It's affordability and rate sensitivity. So if builders can solve this problem, we're going to see a lot more of those headlines, both nationally and locally here in the upcoming year. Here's new listings for the 4 counties we track. You can see a slight downtick this week, and contract activity popped back up slightly. Go and look at showing report, which is a graph we love because it's such a strong leading indicator of what's going to happen in the market in the next month or so. So traffic remains fairly strong year over year, even with less inventory. So again, the data doesn't tell a story of weakening demand. It's telling us that we have rate sensitivity keeping buyers and sales at bay. Constrained inventory, constrained demand, that's the real story of really all of 2023, at least since the summer. Here's off-market activity. These sellers took their home off the market without finding a buyer. Interesting 2-week trend here. We'd expect that number to pop up a bit as well this upcoming week too, because the calendar is turning. So could we see a level of off-market activity we haven't seen in a couple of years? It's definitely possible. Still not a huge concern on a relative scale, but certainly a trend we're going to watch closely. Here's the balance metric. So 60% on this graph represents a pretty balanced market. We had a slight bounce back up with a slight decline in new listings and that slight bump we saw in sales this past week. And when we add in off-market activity, which really bumped up, that's what is driving this number way up this week. So relatively speaking, if you're an active buyer, you saw a bunch of inventory disappear before your eyes this past week. So let's recap really quick. We should see a lot more headlines on new home sales success and not many headlines on foreclosures in the near future, plus a constrained market all around. And the question is, will the lid come off the demand or supply side at any time? We're not so sure it's going to happen soon, but that's why we're here. We'll continue to track it closely. And if it does, you'll hear it from us first. So thanks again for joining us this week, and we'll see you again next week.